I'm delighted to welcome our next speaker all the way from Manila in the Philippines to do a presentation for us today. His name is Vince. I've known Vince probably for about 8 years now, 9 years. He's a very active social entrepreneur and investor and speaker and leader and academic and very inspirational information. He's been teaching microfinance and social entrepreneurship at the Ateneo de Manila University for the past 13 years. And he also established a social enterprise called SEDPI, who provides financial literacy training to low-income overseas Filipino workers in 15 countries worldwide. His presentation titled Mobilizing Social Investment for Social Enterprises will provide a brief global perspective on social finance, and then he's going to actually zoom in on his own practical experience of working with urban and rural communities in the Philippines and through his company SEDPI. And also he'll be talking about the different types of instruments that they are using, and then to assess things like risk and monitor the impact of their investments. So I'm delighted to welcome Vince all the way from the Philippines. Vince, good afternoon, good evening, wherever you are.
Vince, please unmute your microphone.
Okay. Hello? Hello? Yes, okay. So yes, good afternoon all the way here from the Philippines, and thank you very much for having me, and hello to all the Lithuanian viewers to this program. So my name is Vince Rapisura, and I'm the president and co-founder of SEDPI Group of Social Enterprises. So let me start my presentation by providing a definition of social investments coming from the Global Impact Investing Network, which defines social investments as investments made to companies, organizations, and funds with the intention to generate social and environmental impact alongside a financial return. This is also referred to as impact investing, responsible investing, or socially responsible investments. These are the sectors where social investments are typically placed: sustainable agriculture, renewable energy, conservation, microfinance, affordable and accessible basic services, including housing, healthcare, and education. And these are precisely the same sectors where social enterprises operate. Core characteristics of social investments include intentionality, as Phil said a while ago, where investors aim to have social and environmental positive impact. Investment with return expectations, impact measurement, where commitment is made to measure and report social environmental performance. Investors placing social investments vary widely. Fund managers still dominate the space, while development financial institutions, diversified financial institutions, private foundations, pension funds, and insurance companies, as well as family offices, individual investors, non-government organizations, and religious institutions also occupy space in the market. There is also a range of return expectations and asset classes, from impact first versus financial first among social investors. There are those that operate below market rates and those that expect risk-adjusted market rates. Over 1,340 organizations currently manage about $502 billion in impact investing assets worldwide, majority of which are based in the United States, Canada, and Europe, with the exception of Eastern Europe. So let me introduce to you SEDPI Group of Social Enterprises and how it mobilizes social investments to fund its social enterprise initiatives in the Philippines and to Filipinos worldwide. The group is composed of 6 social enterprises that work in the fields of training, research, consulting, development finance, socialized housing, publications, and advocacy. The first of which was established in 2004, and the latest edition in 2016 registered in Singapore. SEDPI Development Finance Incorporated, the financing arm of the group, directly provides microfinance services to some 8,000 poor households in Mindanao, the poorest region in the Philippines. It also provides funding to cooperatives, social enterprises, and non-government organizations through equities and joint ventures. Today, I would like to share how we have grown as a group of mutually reinforcing social enterprises in the past 16 years. I will share our wins and victories, as well as lay out in raw detail the challenges we have to face and sacrifices we have to endure to be where we are at now. SEDPI was registered in 2004 with a capitalization of $500 with the Securities and Exchange Commission. So you will see this in the first graph that is shown to you with the screen. My co-founder and I contended with shoestring budget and poured all our earnings to the organization to end the year with $2,600 in the bank. So you see, we really started with a very, very small amount of money. In the next 2 years, we aim to standardize and professionalize SEDPI, since it is only through proper management that we would grow. We hired our first employee, a bookkeeper, to make sure all our transactions are above board. With this, we were able to convince our family and friends and a few angel investors to pitch in, and we ended with $100,000 in resources by 2006. We consistently plowed back earnings and did not touch a single cent of retained earnings to grow our social enterprise, as could be seen in this graph from 2007 to 2009. In 2007, we forged partnership with Cordovez, a Dutch international development aid agency. It provided a loan to us and a guarantee fund totaling $2 million. The loan was used to provide funding to microfinance institutions that SEDPI supports through capacity building services. On the other hand, the guarantee was used to provide a security to individual social investors placing the money in SEDPI. You can see the growth of Cordovez funds with the green-colored bars, while the orange-colored bars are socially responsible investments that SEDPI mobilized. In line with our effort to be transparent and practice good governance, we invested in our external audit and hired Ernst & Young. At that point, it meant as much as 30% of our net income went on to pay our external auditors. I reckon that this is how much we have to pay to establish our credibility, granting that we don't have vast network during this time. SEDPI aims to be a pioneer in mobilizing social investments for microfinance and social enterprise stakeholders that empower the poor through financial education. We seek social investors who would like to build and preserve their capital with modest returns and want positive social impact. By the turn of the decade, commercial banks took interest in our social enterprise model. So you will see this in our 2010 to 2013 graph. Our track record, we convinced the banks to leverage our equity to access credit from them. From this period until 2016, we used debt as our main development tool and had $6.7 million in total financial resources. So this is a huge amount in terms of the Philippine context, since we are a developing country. Having been able to secure debt from commercial sources, Cordovez exited SEDPI in 2014, as you will see in this 2014 to 2017 graph. Growth in mobilizing social investments steadily grew, but this was dwarfed by how much funding commercial banks were willing to give to finance our commercialization phase. You can see this as the blue-colored bars in the graph. By 2017, we snapped our 12 years of consecutive growth and slumped from 6.7 million to 3.9 million in financial resources. So we contracted. This was a big blow to us and a hard lesson to learn as social entrepreneurs. We had our first case of large-scale failed investment, and SEDPI ended up shouldering all the risk while commercial banks hardly took a hit. At this point, we realized that SEDPI was bearing all the investment risks it was placing in various social enterprises and development organizations, while debts from commercial banks were not sharing from this risk, although we suffered tremendous losses. That's when we realized how debt is skewed in favor to the creditor and squeeze blood out of borrowers. We decided to veer away from debt-driven development to being equity-driven, where profits and risks are shared equitably with partners. Starting in 2017, SEDPI started paying off its debt from commercial banks with the goal of having zero debt by 2025. The past 3 years, from 2017, 2018, and 2019, SEDPI's focus is to grow social investments as means to fuel its growth rather than relying on debt from commercial banks. You can observe this that this is starting to pick up growth in 2020, as shown in the orange-colored bar graph. We chose to have stagnant growth while we replaced debt with equity. In summary, we started with equity through plain sacrifice and bootstrapping. After that, we had 7 years of tremendous growth that through accessing commercial debt from 2010 to 2016. And we spent 3 years in retooling and re-strategizing from 2017 to 2019 and focused on equity-driven growth through social investments. You can observe the steep decline in commercial debt, while the blue bar graph and the steady, albeit slow growth of socially responsible investments as shown in the orange graph. So where do we grow? Where do we go from here? As mentioned, we intend to finish paying off our commercial debt by 2025, and we will achieve this through mobilizing investments, social investments. We will use our track record for achieving our social mission to improve the quality of life of low-income groups, coupled with positive returns to differentiate ourselves from traditional investments. Of course, we are also keen to get impact investors such as fund managers, development finance institutions, and even banks to invest equity in SEDPI. We are proposing a fund matching scheme where impact investors place equal amount of investment from SEDPI, and SEDPI will mobilize from social investors. If this happens, we would be able to double the number of poor households we are able to reach from 500,000 to 1 million by 2025. The foundation of our model for mobilizing social investment is through capacity building and education. So you will see the graph here, a graphical representation of our business model as to how we provide capacity building and financing to the grassroots. We provide training, research, and consulting services to micro enterprises, farmers, fisher folks, and various grassroots groups. We also provide capacity building services to social enterprises and microfinance institutions. Our financing company executes joint ventures with MFIs and SEs, and in turn, SEs and MFIs sign memorandum of agreement with low-income individuals. Our financing company provides capital to MFIs and SEs. In turn, they provide capital to low-income individuals. Repayments then flow back from grassroots groups to MFIs and SEs and then to SEDPI. While doing this, SEDPI also provides financial literacy training to social investors who are mostly Filipino migrants, whom we call as overseas Filipino workers. SEDPI educates them on social investing aside from basic principles and practices of budgeting, saving, debt management, and insurance protection. SEDPI executes joint venture agreement with social investors and consolidates this to be invested and placed to the financing company. This will then flow to MFIs and SEs and then to the low-income groups, and then back from low-income groups to MFIs and SEs, and then the financing company. SEDPI Development Finance, Inc. issues preferred shares to SEDPI Social Enterprise Ventures. The joint venture spells out equitable risk sharing and profit sharing between social investors and SEDPI. In this system, we share in the profits and losses of the investments. This is in contrast to traditional fund managers who earn commission both in up and down markets. Our model is really hinged on grassroots-led empowerment. SEDPI empowers women migrant domestic workers abroad, and with this empowerment comes the ability to place social investments that we now use to fund livelihoods of women micro-entrepreneurs in rural areas. We provide social investments to 12 cooperatives, 2 non-government organizations, a rural bank, and 4 social enterprises. These organizations have a combined outreach of 700,000 low-income households, and since 2004, we've released a cumulative total of $36 million in funding to development organizations. In terms of profitability, SEDPI share capital investment in cooperatives as shown in the orange line graph. So now you will see a graph that shows the growth of investment with cooperatives in contrast with the Philippine Stock Exchange, where the stock market is traded in the Philippines. So SEDPI share capital investment in cooperatives, as shown in the orange line in the graph, performed 2.5 times better than the Philippine Stock Exchange, shown here as the blue line in the graph. Our investments in the cooperatives gave 13% internal rate of return since 2005, while the stock market only provided 6%. SEDPI also invests in social enterprises that are involved in sustainable agriculture, farm tourism, renewable energy, food, and handicraft. Our social microfinance model focuses on financial literacy to poor households, targeting women in rural areas. We provide funding through joint ventures so they could finance their livelihood. Aside from this, we facilitate access to low-income households to government welfare services. With these services, our members are enthusiastic to repay back and grow their livelihoods. With this model, we also demonstrated that the poor can significantly finance their livelihood when financial products and services are designed with their needs directly addressed. So in this graph, from 2017, 18, 2019, and 2020, our members were able to finance half of their funding requirements through grassroots-led financing. Micro-entrepreneurs are co-joint venturers, which make them as equal business partners rather than the lopsided power interplay between creditors and debtors. A matching fund with impact investors previously proposed could also be implemented here. The impact of our social investment model thus far is promising. Our annual social performance management assessment reveals that 70% of low-income groups in our model use their income to invest in education for their children. 82% report improved business, income, and nutrition. 67% also reported improved housing. And most importantly, 34% of members no longer consider themselves poor. SEDPI also partners with government to raise funds for its social enterprise initiatives. For example, we partner with the Home Mutual Development Fund to implement our socialized housing project so that members can access 3% subsidized interest rate for housing compared to 15% in the market. We also partnered with the Social Security system to provide social insurance and retirement benefits to low-income households. And SEDPI upgraded this by forging another partnership with Climbs, a cooperative that provides insurance to low-income groups. SEDPI, which stands for Social Enterprise Development Partnerships Incorporated, uses capacity building as a means to mobilize funding, because funders typically look for absorptive capacity of institutions before they place investments. As you can see, we've done quite extensively in terms of providing capacity building for grassroots and development organizations worldwide. Just to give you examples, we were able to get funding from the government, from the Climate Change Commission, and we were able to raise $100,000 for climate smart agriculture. From the Department of Agrarian Reform, about $1.8 million to build the capacity of 35 agrarian beneficiary organizations. We also trained 23 microfinance institutions nationwide in partnership with the Department of Agriculture. And we were able to mobilize $7 million in micro-agri loans to 18,000 agrarian reform beneficiaries. We also partnered with the largest cooperative network here in the Philippines, and through the documentation of a franchise for microfinance institutions, specifically for cooperatives, we were able to generate 20 million in savings and share capital from farmers, and this was replicated in 67 cooperatives in the Philippines. Lastly, in floating a bond with the capital markets, we did a due diligence study with Asia Philippines, which is the largest microfinance institution here in the Philippines, and we floated 80 million in terms of a bond to help them finance their growth. So this was financed, and this was financed by the capital markets with the help of the banks, and it was guaranteed by the Asian Development Bank. So with the new normal, this is, I think, the new normal for the social enterprise financing. There will really be a shift from purely profit-led investments to having a focus on social mission. And I think there would also be a strong shift from capitalism to risk sharing and profit sharing. So there would be more equity-based investments rather than debt-driven funding sources for social enterprises. We are also promoting grassroots-led solidarity financing, where we empower the poor to help themselves. And of course, as a capacity building institution, we are a believer that we have to improve the absorptive capacity of social enterprises to be able to manage funds that they receive and be able to execute and to be able to deliver the financial returns and the social and environmental impact that they promise to their social investments. So thank you. That's my presentation for today.
Vince, for giving us such a thorough kind of review and overview of the global perspective, and then drilling down into some very specific areas of activity. Have a couple of questions, and we're doing okay for time, actually. We've probably got about 10, 12 minutes before we have to break. You mentioned a point right towards the end around this kind of the new normal shift from, kind of purely profit into kind of more risk sharing or equity type based investments. Some may also talk or call it kind of stakeholder capitalism, maybe. My question is, what have you seen that suggests to you that this is actually going to happen?
Well, yeah, to give it a very concrete example. So I do a lot of online education right now because of the lockdown. I used to do this through capacity building with face-to-face trainings. And through face-to-face trainings, I was only able to mobilize a few hundred thousand pesos at a time. But now that we are doing this publicly through social media and providing an opportunity for a lot of people to understand social mission that goes hand in hand with traditional investments, they would prefer that over a purely profit-based traditional investment. And since this lockdown, I was able to mobilize about 4 million pesos, and that's about 200,000 US dollars. Versus when I only do this in a face-to-face environment through training. At the end of the training, perhaps I could only mobilize about 5,000 US dollars. So with the combination of us providing capacity building services and educating the public about social investments and the benefits of having social investments, as well as banking on technology to reach a wider audience, we are really able to see this to a fruition, that the trend is towards social investments rather than purely traditional. And there's also a study, I forget what the institution that made this, but it was Forbes, actually. Sorry. So Forbes actually came up with an article that social investments 50% of the time perform better in terms of financial returns compared to traditional investments. So there's really icing on the cake, no, when you go into social investments, because social investments not only provide returns in terms of financial, but there's also returns in terms of the social and the environmental aspect.
Fabulous. Thank you very much for that. And I've just got another question as well, is that, you're probably familiar with this as well, is that the kind of social enterprises are always looking for capital. They're looking for investment, maybe sometimes grants over any other forms of, debt or equity type investments. I want to put that to one side, and I just want to ask you to talk a little bit more, and you did that a little bit in your presentation, but this idea of kind of non-financial support, what is available or what have you been involved in or aware of in the Philippines of the different types of non-financial support? So you mentioned capacity building, but any other examples?
Yes, we actually when we do capacity building services to grassroots organizations, we typically partner with government so that we can use physical infrastructure that's already there. So, for example, we need a venue, or we need production sites, then we can actually partner with government to provide these facilities for us. We also partner with non-government organizations and the academe, engage them in terms of information sharing so that we don't need to spend much for research and development, and because we all know that research and development is quite expensive. So with these partnerships, we are able to tap on non-financial resources. And of course, you also have to take into account the spirit of volunteerism. So right now, where there's a lot of unemployment and because of the uncertainties, there's a move towards providing volunteer work to make people feel productive while on lockdown. So you can also take advantage of that, and that's a non-financial resource.
Excellent, thank you. Still have a few minutes left, and I've got still a couple of questions to ask you. I see you've essentially over the 16 years that SEDPI has been going, essentially kind of created your own ecosystem where you're providing different types of funding and investment, you are capitalizing, you are providing training, you're working with other institutionals and microfinance institutions and other social investment finance institutions. Where does the SEDPI offer, if you like, and group of companies sit within the wider ecosystem and landscape in terms of other partners and stakeholders that you haven't mentioned, or sort of pipeline sort of activities?
Well, what we realized really is that to address a certain social issue, it is quite difficult to just have a single organization address it. So, and the way that we are also able to access funding resources is would depend on the type of social enterprise that we have established over time. So we have established these different social enterprises in our group precisely to address specific social concern areas of the marginalized sectors that we serve. I think that's how we see ourselves in the broader spectrum. I actually compare ourselves to the private conglomerates, where groups of companies are coming together to address specific needs of the market. While for us, we come together, but we address specific needs of the marginalized sectors.
That's a very interesting kind of use of words, a private conglomerate. So essentially what you are doing is a kind of a conglomerate of NGOs and social enterprises. And I think what's interesting with that model as well as how you've described it is the potential for increased resilience, yeah? So that you've got all these organizations that are dependent and interdependent who are working together and are clearly delivering social value, but also financial returns. Maybe you could perhaps elaborate a little bit more on that idea of that kind of interdependence idea of kind of organizational social capital.
Right. So, for example, our capacity building arm provides assessment of our social investments. So it provides the technical part of it, the technical analysis, while our financing company is the one focusing on mobilizing resources and deploying these resources. We've also established a foundation, and the foundation is primarily tasked to mobilize grants from the public and also to mobilize public funding from the government. We also use the foundation as a means for our private corporations that earn profit, and we donate part of our income as tax deductibles to this foundation so that we could use this again for our social enterprise initiatives. Recently, we also put up a real estate company just to focus on socialized housing because it's an entirely different field altogether. That's why we had to separate it. But the financing company will still be there to provide support in terms of financing to this real estate company focusing on socialized housing. So these are really a group of mutually reinforcing social enterprises working together towards a common goal of delivering financial returns, modest financial returns, and at the same time, positive social and environmental impact.
Excellent, thank you. And I've got a question here from Alina as well. She asks, can you describe the typical portrait of your social investors? Who are these people?
Yeah, well, you'd be surprised because the social investors that we target are also the marginalized sector. The overseas Filipino workers, when we go abroad and train them, they are really the women domestic workers or construction workers, the ones in the food and board industry abroad, because that's the quality of labor that we, most of the quality of labor that we export. Of course, we have the professionals, but mainly we still target the marginalized groups in terms of the migrant sectors. So that's the beauty of this model, because the ones that we are building the capacity in terms of social investments are poor, marginalized Filipino migrant workers. And then when they improve their finances, they're now able to invest in SEDPI, and we use that to invest in the livelihoods of women micro entrepreneurs in rural areas. So that's the gist of our social investments. So right now, we are in the process of widening our net, so to speak, through social media. And I would not have done this really if the lockdown did not happen, because our default was to go outside, to go abroad and go face-to-face meetings with the migrants and do the trainings with them. But that's highly high. That's high cost, and it's also has high carbon footprint. Now that I'm stuck here at home, so there's no other way but to do online trainings with them, and that is low carbon footprints and low cost plus higher saving social investment mobilized. So it's actually an opportunity that only evolved and that was showed to us during this pandemic.
Excellent. Vince, thank you very, very much for your time today. It's been amazing. It's been really good to talk to you. It's been quite a few years since we last spoke. But I just want to, extend the thanks of the team here, but also everyone at home that was listening to your presentation, to say thank you very much for your time, and keep safe and keep well. And I look forward to seeing you soon.
Yeah. Thank you, and I hope that my presentation was also able to help the Lithuanian community. Thank you very much.
Thank you, Vince. And now I think we're spot on time. Actually, we've got about 15 minutes now. We're going to have a short break, and then after the break, we are going to be talking about the social impact kind of good case practice from Finland, where Katja will be talking to us about the work that they're doing in Finland. So I would like to say thank you for everyone that's joined us for this first session, and that we'll see you in 15 minutes on the other side. Thank you.